What is going on with Ethereum, and where's the price headed next? Welcome back to Explain the Charts, your go-to channel for no-hype technical analysis. Today is November 23rd, 2025, and we have a lot to cover on ETHUSD, which has seen some dramatic downside action. First, we'll break down the latest news driving the market, and then we will dive deep into the daily, hourly, and 15-minute charts to see what the price action is telling us. Let's start with the current events, because the headlines are painting a very bearish picture for the short term. News outlets are reporting that Ethereum's price crashed to near $2,800, largely triggered by a massive $1.5 billion outflow from Ethereum ETFs. This has created significant sell pressure, with analysts now suggesting there's a 70% probability ETH could hit $2,750 before the year is over. This market weakness persists even as there are whispers of the Federal Reserve considering more rate cuts, a move that would typically be bullish for risk assets like crypto. Fundstrat's Tom Lee has an interesting take, attributing the weakness not to the Fed, but to liquidity shocks from market makers whose balance sheets were crippled after a major liquidation event back on October 10th. He calls this a form of quantitative tightening for crypto, which dampens prices, though he remains bullish on Ethereum long-term, even predicting a Bitcoin-like supercycle. This selling pressure is confirmed by on-chain data showing over $175 million in ETH liquidations in a single 24-hour period, with the vast majority being long positions. However, it's not all bearish news. While the market is panicking, some major institutional players are accumulating. Cathie Wood's ARK Invest has been buying the dip, and corporate treasuries like Bitmine have added over 54,000 ETH to their holdings recently. Furthermore, BlackRock is reportedly moving forward with plans for a staked Ethereum ETF, signaling long-term institutional conviction in the asset. So we have a classic battle between short-term panic driven by ETF outflows and long-term institutional confidence. Now, let's see how this narrative plays out on the charts, starting with the one-day time frame. Looking at this daily chart, the downtrend that began in late September is undeniable. After peaking above $4,700, the price has formed a clear series of lower highs and lower lows, which aligns with the five-wave decline structure mentioned in some technical reports. That psychological $4,000 level, which acted as support for a while, has now become a major area of overhead resistance. More recently, we saw price break decisively below the key $3,000 psychological level, which was a very bearish signal. The volume on these recent red candles, especially the drop on November 21st, is significant, showing strong conviction from sellers. This drop correlates directly with the news of the massive ETF outflows, showing a clear cause and effect. The price is now testing a critical support zone, which the news pegged between $2,775 and $2,800. Yesterday's candle closed right in this zone at $2,767, so we're at a pivotal moment right now. If this support zone fails to hold, the next major historical support level sits around the $2,500 mark, which was a key battleground earlier this year. Below that, bears will be eyeing the $2,200 to $2,300 region. On the upside, the first major hurdle for bulls is to reclaim $3,000. Until that happens, any bounce is likely to be seen as a relief rally within a larger downtrend. Let's zoom in on this downtrend since the September peak to really highlight the structure. Here we can clearly see the sharp decline on October 10th, which Tom Lee identified as the start of this liquidity crunch. The price fell from over $4,300 to a low of $3,500 in a single day. After that, we had a relief rally that failed around the $4,200 resistance level in mid-October, confirming the downtrend. The most recent leg down started after a failure to hold above $3,600 in early November, leading us to our current critical support test. This entire structure looks heavy, and the sellers have been in firm control. Now let's switch to the 15-minute chart to analyze the most recent price action from the last couple of days. Here we can see the anatomy of the crash on November 21st. Price was trading in a range before a massive wave of selling came in, pushing ETH down hundreds of dollars in just a few hours. Following that capitulation, the price has been attempting to form a base. We are currently consolidating in a tight range, roughly between $2,700 on the low end and $2,800 on the high end. This is typical behavior after a huge move, as the market tries to find equilibrium. For short-term traders, this range is key. A convincing break and hold above the range high of $2,800 could signal a potential bounce towards the next minor resistance around $2,900, and then the major psychological test at $3,000. Conversely, if sellers push the price back down and we break below the recent low of around $2,700, it would be a strong confirmation of bearish continuation. The volume has tapered off during this consolidation, so we need to watch for a spike in volume to confirm the direction of the next move. Alright, let's zoom back out to the daily chart to recap the key takeaways and potential scenarios. To summarize, Ethereum is in a confirmed downtrend on the daily chart, fueled by significant ETF outflows and negative market sentiment. It is currently sitting on a crucial make-or-break support level between $2,775 and $2,800. The key resistance levels to watch on any bounce are, first, the top of the short-term range at $2,800, then the major psychological level at $3,000, and followed by the recent rally highs around $3,200 to $3,300. Key support levels below us are the current zone, then the major historical level around $2,500, and further down, the $2,200 to $2,300 area. Now for some unbiased predictions. Given the overwhelming technical and fundamental pressure, the bearish scenario seems most probable in the short term, let's say a 70% chance. If we see a daily close below $2,700, a move down to test $2,500 becomes very likely. This would be reinforced by continued ETF outflows and general crypto market weakness. The bullish case, which I'd place at a 30% probability, relies on this current support zone holding strong. We would need to see a strong volume reversal, perhaps fueled by the institutional dip buying we've heard about, to push the price back above $3,000. Reclaiming $3,000 would be the first major signal that the bulls are fighting back. Looking ahead, the most important thing to watch will be the ETF flow data. A shift from outflows back to inflows would be the strongest catalyst for a trend reversal. Also, keep an eye on how Bitcoin performs, as its price action will heavily influence the entire market. That's our in-depth analysis for today. Thank you for watching Explain the Charts. Before we go, please remember that this is not financial advice. The crypto market is extremely volatile, and you should always do your own research and risk management before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Ethereum's next move in the comments below.